Greetings, members one and all of the Salivation Nation. Is silver a golden opportunity? Let's explore. You know, with the recent run-up of silver prices as of late, outperforming gold in terms of the day-by-day performances, you've often heard me talk about and caution against the opposite side if prices go back down again. But nonetheless, I believe the volatility of silver could work in your favor and provide what we refer to as a golden opportunity for those of you who have either been holding silver that you've purchased at lower prices for a while, or for those of you who want to trade in for some gold down the road based off the ratio. And that's what we're going to talk about in this video. Taking times and capitalizing on opportunities like this is some people certainly have a propensity for that type of thing. And I believe this provides that opportunity because we've not seen these ratios since before the pandemic, long before the pandemic, of somewhere between 71 and 74 ounces of silver to buy 1 ounce of gold here. And I've seen in some of the comment section of my videos of folks who are doing just that, finding ways to cash in their silver for gold. And when you think about it, it's not really cashing in per se, because when you think of cash, we think of currency. And currency are just the fiat notes that are printed by the United States Federal Reserve and backed by the full faith and credit of the United States government. But it's really moneying out, because gold is money, folks. And I see gold as the ultimate hedge. And it is less volatile than silver. And so when you do trade silver for gold, well, you are essentially mitigating risk. Because as is always the case, almost every single time, and it does give you some sentiment to what that silver certainly is a hedge, a wealth preserver in a sense in times like this. It does shoot up, and it typically performs better in times like this, especially when there's a lot of concern for economic conditions in the country. But make no mistake, the stability of gold is a very attractive thing. And that is something that I learned quite a while ago, but it's really embraced it back in 2017. The idea of holding gold. And I have not really traded the ratio per se, but you have heard me talk about that there are actually 4 different gold to silver ratios, and that is something that you have to keep in mind when you're making this decision to trade that ratio between gold and silver. So what does that mean? Well, essentially it is going into your local coin shop. The ideal way to do it is when the ratio narrows to a certain level, you take your silver coins into your local coin shop or your rounds or what have you, and you trade them ounce for ounce based off the ratio, if they will do that. Will they do that? I don't know. That just depends on your local coin shop and what their policies are. Will they trade gold for silver? It'd be very interesting to see what your local coin shop will do if you have a local coin shop. And if you don't, well, more than likely it's going to be an online dealer if they will do that. And how would they do that? Let's say it's 70 to 1. Let's say it goes down to 70 to 1, where they literally allow you to mail 70 ounces of silver for 1 ounce of gold. And what kind of gold would you get? Are you going to get, if it's generic silver, buffaloes and privately issued pieces, which are typically command much less of a premium. In fact, sometimes you would take a loss upon selling those. Are you going to see that kind of return back in getting an ounce of gold that would be higher premium? No, you'd probably have to pay the difference there. But more than likely, you might be able to get a privately issued bar, for instance, of gold, and that's something you might consider. The other situation would be, coins and what have you. Like for instance, 70 Britannias for one Britannia, 70 silver Britannias for one gold Britannia would be a fair and equitable trade. If your online dealer would even do such a thing. Some of these online dealers have minimums, though, of that they would be willing, and I don't know what their policies would be on trading that ratio physically. But you have to take that into account. Some places will buy your silver back from you at a specified price above or under spot or at spot, and then sell you a gold coin with that money for the normal prices above spot. And that is another ratio you have to take into account. And how do they measure that? Are they measuring that based off of the a bid price, the ask price, or the futures price? Which it seems to be those are the three different areas of prices that are talked about in the community out there, for sure. So it is a fascinating thing as we consider buying and selling gold and silver, and taking that opportunity when the ratio narrows to take your silver and make it work for you in the marketplace to acquire more gold. There's people that have apologize. I'm messing around with these trying to get a good view of these. There is certainly times when you accumulate gold or silver that you feel like you have enough silver out there and you need more gold, but gold is just too expensive. And so that would be the attractive capability to be able to accumulate 1 ounce of gold. And typically that's what you would do, is you would always want to trade up for that full ounce, because the fractionals provide a much higher premium, and more than likely you're going to get screwed in terms of the ounce for ounce. For instance, if it's a quarter ounce and it's 100 to 1, let's say, or let's say it's if it's 100 to 1, then you trade 25 ounces for a quarter ounce of silver. That's math won't work, even though the math does work, numerically. It will not work in an LCS situation because those smaller pieces have a higher premium, and but nonetheless, it just depends. It depends on the organization or the local coin shop that you're dealing with there. But it is a way to provide a golden opportunity as the ratio narrows. Now, the other risky portion to trading the ratio is not only keeping in mind premiums and doing this on the physical side, because you can do it on the paper side or the electronic side. There was a guy that wrote a book about that, Carl Ushanka, called Trade the Ratio. You can do that, and that is probably the best way, but you're basically playing the markets there and timing and doing things. It's a different strategy. But if you're doing it in the physical world, you have to keep in mind that even though the ratio is, hovering between 72, 73 to 1 as of the recording of this video, what will it be tomorrow and the next day? Will it go up? Will it go down? Just like when you buy any precious metal product, there is the risk that that price will increase, and there is the risk that, and there's the chance that it could decrease. And that ratio is exactly the same way. The ratio could increase or decrease. So in other words, back when the gold to silver ratio was 100 to 1, you would lose out on 25 ounces if it goes down to 75 to 1. You just lost 75 ounces of silver on that, or you've gained 25 ounces. You saved 25 ounces. But if it goes down to 50 to 1, let's say, and it's at 75 to 1, well, you've lost that 25 ounces of silver in that trade. And just as is the case, as I always caution to folks out there, there is risk, and you have to understand that risk. There's risk of losing your fiat. But when you think about it from the standard of gaining and holding on to precious metals, especially the less risky of the two, gold, well, you're going to be better suited. And that's how I think about it. I have bought gold when it was very high, and have found that it has preserve my wealth in the long term, even when I lose necessarily money or currency in the trade, because I've got something that has a much better track record of preserving wealth than just a few years of it losing its price. In other words, you understand the value of the metal that you're dealing with. So when you trade gold, silver for gold, that is the kind of thing you have to keep in mind as well too. It's about diversification of your stack. Some people do it to profit. There's people who have different motivations for doing it. But in times when the ratio narrows, it does provide that golden opportunity for silver to make that trade. And but just the fact that the silver to gold ratio is narrowing now, I think is just a testament for silver, in that it is now being seen by the marketplace as a hedge against economic instability. I was a little bit worried about that for a while, as we saw the ratio still spread remain fairly wide. But as it is narrowing now, I'm starting to have a little different viewpoint on it. But we still have a ways to go. This is still unusually high, considering where gold is at and where silver really should be during these times. So we still have a ways to go on there. So I hope you found this video helpful. Would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.